So I wanted to discuss this talk with you. This is Moil, and I took this trade last week. And let us discuss what I did here. So as you can see, the stock is in a nice uptrend. So the blue line is above the green and the green is above the red. So 50-day moving average, 150-day moving average, and the 200-day moving average. When these are lined up as blue, green, red properly, that's a uptrending stock. The orange line is the 8-day exponential moving average. The purple line is the 21-day exponential moving average. And here you see the volume. So the stock starts to go up, and here it starts consolidating. So it starts creating a base here after this candle. So let us look at this base. Okay. I will discuss with you where I took the trade, where I kept the stop loss, where I kept the target, how did I execute the trade. I will discuss everything now here. First, let us look at the base. So I bought the stock on this day, which is 23rd of April. Okay. Now, I did not know what was going to happen next, or I did not know what was going to happen on 23rd April. So please ignore these four candles. Let us look at all the candles before these four candles, because that is what you see. That is what I see on the chart. Okay. So if I look at this base, this is the highest point in the base. So this is 0.1. This is 0.2, the lowest point. Then again, this is 0.3. This is 0.4. So I'm going from highest point to the lowest point. This is 0.4 and this is 0.5. Okay. So on this day, the stock came in my filtering criteria. So I have a specific filtering criteria. On this particular day, the stock came in that list. So I was looking at the chart. So I saw here there is one wave here from 1 to 2. Then there is another wave here from 3 to 4 and then 5. Okay. So I need two waves to buy the stock. So 0.1, 0.2, 0.3, 0.4, and 0.5, going from highest to lowest to highest to lowest and then to highest. So 0.3, the high of this candle becomes my buy point. So what's that? Let's draw a line here. So this is 351.50. So let me give it 351.50, and let us give it yellow color. So that is where I plan to buy the stock. So on this day, when it triggers that, I set a price alert. So I get a mobile phone ping when it touches that yellow line. So when I received that notification, I immediately go to the 15-minute chart to execute the trade. So if you look at this, this is 23rd April. Let us go to the 15-minute chart, 23rd April. So I'm looking for a breakout on the 15-minute chart. So this is the first candle. This is the second candle. And here is the breakout candle. See, this particular candle on 23rd April closes nicely above the yellow line. So majority of the body or the height of the candle is above the yellow line. So I take a normal position here. So normal position size for me is 6.25%. So at the close, that's my buy price. So roughly 355.40 was my buy price. So let me draw a blue line here, 355.40. That's where I actually bought the stock with a market order. Now let us go back to the daily chart to set the stop loss and target. Now my stop loss is 8% because this is a swing trade. So the yellow is where I plan to buy the stock. The blue is where I actually bought the stock. Okay. So if we put a stop loss of 8%, that is 355.40 multiplied by 0.92, that is 327. So I'm using this calculator. So let us draw my stop loss, 327. Let us give it red color. So this is my stop loss. And my profit target is 16%. So 2:1 reward to risk ratio. So 355.40 multiplied by 1.16. So 412. So 412 is my swing trade target, 412. So this green line is my target. The red line is my stop loss. And this is green and red is decided based on the blue line, not the yellow line, because blue is my actual buy price. Now you might say, Rohit, if you look at this trade, the target was achieved in 1 to 3 days. Okay. Now the question is, why? You might say, Rohit, 8% is too much risk. Okay, on a 6.25% position size. But for me, it's not 8% risk. For me, it is 0.5% risk, because 6.25% position size multiplied by 8% is equal to 0.5%. 6.25 multiplied by 8%, that is 0.5%. So my total risk on this trade is 0.5% of my portfolio. It's like I am risking, if I have $100, I am risking 50 cents. If I have 100 rupees, I am risking only 50 paise, right? So 6.25% of my portfolio multiplied by 8%, that is 0.5% of my total portfolio is at risk. Now tell me one thing, is that high risk? No. So on the surface, it looks like I have taken too much risk. But if you really go into the mathematics, I'm just risking 50 paise out of 100 rupees or 50 cents out of $100, right? So that's my trade. Now see, the price comes nowhere near my stop loss. Now the question is, on this day, this is 9% jump in a single day. The question is, why didn't I sell here? Right? Now the answer is very simple. Look at the volume. It is almost, the average volume is 2.8 million and the total volume is 15 million. So this is roughly 5 times more than average volume. So this is institutions buying the stock. This is not some retail traders buying the stock. Okay. Institutions are accumulating the stock. So when the volume is very high, the big money is buying the stock. Plus, the stock closed above my buy point and the yellow line. So why should I sell? There is no reason to sell. Next candle, if you see, this is a shooting star. Okay, if you know a little bit of candlesticks, this is a weak closing green candle. Okay, now the candle has closed. The closing of the candle is weak. See, it is closing far away from the high price. So why didn't I sell on this day? That is another question, right? Because on this day also there is high volume, but the stock closes weak. That means there is supply. See, on this day there is demand. On this day there is supply. So why didn't I sell? So there are a couple of reasons. First reason is, although it's a supply day, high volume, weak closing, although it is a supply day, but the closing is still above the previous day close. This is number one. Number two, this is an all-time high price for the stock. If I look at the monthly, if I go to the monthly chart, see, this is the all-time high price. Okay. Never before the stock has touched this price. Okay. So it's an all-time high price. Let me come back to the daily. So on this day, never before has the stock touched this price. So whenever a stock is at all-time high, that means this shooting star or this candle is not confirming any prior resistance. So this is like uncharted territory, right? So why should I sell? It has closed above the previous day close, plus it is in new high ground, it is in uncharted territory, plus the stock remains above my all of my moving averages. So there is no practical reason to sell the stock. Okay, there is the market is not giving me any negative factor except for this long upper shadow. Okay, so I said to myself, okay, let me wait another day. Okay, it has gone very close to my target, but has come down. That's a negative factor, but there are positive factors as well. So if I weigh the negative and positive factors, the positive factors are more. So I stick with the stock. I wait another day. Now look what happens the next day. It doesn't even give me any chance to stay in the stock, because this is an automatic target that I place in my broker terminal. I'm out of the stock. So 6.25% multiplied by 16% is my profit target in this. So what is my total profit on the portfolio in terms of percentage of portfolio, which is 6.25% multiplied by 16%. 16, which is 1%. So in 3 days, I made 1% on my total portfolio, which in my view is a fabulous return. Okay. 1% on portfolio in just 3 days. This is the perfect picture perfect swing trade for me. Now I could have taken 12.5% position. I could have taken 20% position, but then my risk would have been higher, right? If I had put 20% of my portfolio in this stock with a 8% stop loss, then my total risk is 1.6% of my total portfolio, right? 20 multiplied by 8. 1.6% loss on portfolio size is too much. So my risk here is 50 paise or 50 cents out of 100. But I end up making 1% or $1 out of 100. And 1% profit in 3 days is a fabulous return. If you've ever got 1% profit on portfolio in 3 days, you know what I'm talking about. So there are multiple factors for me to remain in the trade. Now, the next question is, you might ask, Rohit, why did you sell here? Why not just ride these, like, why not sell the stock till it closes below the 21-day exponential moving average? But well, I could do that, right? But my goal on this trade was to book the profit and use that money to finance my risk on other stocks that I want to buy. So I will take this profit, I will use that profit to finance, like, every stock I'm going to put 8% stop loss, right? So that money has to be financed. I don't want to finance that with my money. I want to finance that with profit that I make on this trade. Plus, another point, I don't know what is going to happen next. This is the latest scandal. Now, the stock could double from here, but I don't care. Now, I'm not going to look at the chart. Whatever objective I had in mind before entering, it's the objective is achieved. Okay. Plus, booking a profit reduces the volatility in my equity portfolio. See, if I'm only booking losses, but I'm not booking my profits, then the portfolio will be in red always. But if I'm booking good profits, then I have to book multiple losses for my profit to be wiped out, right? So booking profits reduces the volatility in the portfolio or reduces the drawdowns in the portfolio. So this is the Moil trade. So I hope you understood what I discussed. If you have any question, put the question in the comment section. Let us discuss this trade. It was, in my view, it was a fantastic trade. I don't give credit to myself to the reason I don't give credit to myself to it's because I made money on this trade. I give credit to myself because my execution on this trade was correct. If my execution was wrong and if I had made money, that is not correct. But if my execution is correct and then I have made money, that is the real test of a professional trader. I see a lot of my students, they execute the trade wrongly, and then when the profit target gets hit, they celebrate. No, that is not correct. Your execution was wrong. That means you don't deserve to earn profit on that trade because eventually you are going to lose money. You got what I'm saying? So the execution, please judge yourself based on how you execute the trade, not based on how much money you are making from the trade. So put your questions in the comment section. Let us discuss this talk. Thank you so much.